Welcome to the GotStocks Podcast, powered by IBN. This original audio production delivers market and sector insights, as well as exclusive interviews with innovative executives shaping the future in fast-moving industries, and may feature a client partner of IBN or one of the 60-plus investor-focused brands within IBN's dynamic brand portfolio. As a multifaceted financial news and publishing company, IBN leverages its extensive distribution network, utilizing multiple proprietary corporate communication tools to introduce both public and private companies to a vast and diverse audience of investors, consumers, influencers, journalists, and other targeted segments of the public. IBN may have received compensation to produce this audio content. Please be sure to read IBN's entire disclaimers for full disclosures. Now sit back, relax, and enjoy the next revelatory episode of IBN's GotStocks Podcast.
Hi, and welcome to another exciting show here with me, Carmel Fisher. Today, we're spotlighting OptimumBank Holdings Inc. They are listed on the New York Stock Exchange as OPHC. Now, OptimumBank Holdings provides consumer and commercial banking services to individuals and businesses. I'm excited today to sit down with chairman of the board since around 2011, Mr. Moishe Gubin. Welcome.
Thank you for having me.
Very excited to learn more about OptimumBank Holdings. I gave a very brief introduction there about the company. Please inform us more about your mission and vision and at least some of your key milestones for the past 12 months and looking ahead.
Well, we are a community bank that services, like you said, businesses and individuals. We're located in South Florida. In fact, the background behind me is our building on Bayview and Commercial Boulevard, which is where our headquarters is in Fort Lauderdale, Florida. We've been on the New York Stock Exchange. We've been listed. We're going on 25-year anniversary in November, so about a month away from being 25 years old. Like I said, we broke $1 billion in the last year. I'm excited. We've had a good growth rate, probably close to 30-40% growth over the last 5-6 years. And we expect that to continue. And we got a really, really good bank. Our bank is geared towards customer service. We know that we can't compete with a big bank with coverage of where we are, but where we are able to compete is by how we take care of our customers and how we treat everybody as family members for our ever-enlarging family.
Awesome, and congratulations on that 25-year old business. That's incredible. You've projected, you just mentioned the, around 25 to 30% annual growth, which really is based on a projected total assets reaching $1.5 to $1.6 billion by the end of 2026. Also looking at your current $1 million plus billion-dollar base. Well, given that community banks often face capital constraints at this growth rate, how are you planning to fund this expansion?
Well, so we're currently earning about $20 to $25 million of net income a year. Based on $25 million of net income at a 10% capital rate, right? That gives us the ability to grow about $200 million a year. On top of that, we have no debt, by the way, no debt on our balance sheet today. So there's opportunity for us to take in preferred debt. There's a lot of different in the capital markets. There's a lot of avenues we could go to bring in either equity or debt to be able to carry our balance sheet. I mean, our return is we're over a 4.3 NIM. So, at a 10 times leverage, that's 40%, right? So if we bring in any kind of money that's less expensive, right? It's accretive to our value of a company and what we're making. I hope that makes sense. I don't know if I said that clearly enough, but
oh, no, that makes perfect sense. Why don't I try to clarify just a little bit? Like, basically, would you be considering raising additional capital?
Yeah. We're always looking to raise capital as long as it's accretive to our shareholders. So right now, our real book value per share is about $5.10 or $5.15, $5.20. So I'm not selling stock below that because I refuse to hurt my shareholders. So when the stock moves, which our right now the financial markets, so the financial stocks, our bank included, is selling below book, which is a discount. Um, and I can't sell stock like that, but people can buy the stock on the open market, and which is what usually happens. And then we'll ride high; it'll get to where we got to be, and then we should be able to sell stock to investors.
Okay. How do you plan to balance the aggressive growth with maintaining the above industry return on equity levels?
So we've done a good job of it. I mean, if we need capital, we're able to raise capital. We've never had a problem bringing in equity. Um, we're well known. There's a lot of our current investor base. There's a ton of investors that'll support us. We have institutions that are investors that'll also support us. I'm not worried at all as far as being able to raise money. It's and we have an active ATM today. And so when the stock price gets up to where we need it to be, we should be able to sell stock if we need stock, if we need to. Right now, our projections are based on our loan growth. I don't think we need to raise capital in the fourth quarter. But if we do, it's not going to be a lot of money. So through the ATM, it should be easy to get done.
Great. Now, OptimumBank also achieved SBA preferred lender status in just over 2 years and scaled this from zero SBA lending, which is pretty remarkable execution. Can you quantify the impact this has had on loan portfolio and margins?
Well, I'll tell you, everything that we do starts with a risk assessment, and bank management and myself and the rest of the board, right? We feel we build out the infrastructure beforehand to be able to do something right, and then we're able to start the program, and we don't do anything like halfway. So in the case of SBA, we started right off the bat with a lender and an underwriter, and we took from the best that we were able to find, quality people. That department's already up to, I think, 4 or 6 people, and it's running real well. We're closing a bunch of loans, and I think we're doing a real fine job. As far as margins go, um, you know, there is a better margin in SBA product, but there's more of a risk of default rates. As of now, we haven't seen any defaults yet, but we built into our model that there will be at some point, just because that's how SBA lending works. Our models were selling off the secured portion of 75%, and then we're keeping 25%. So on our balance sheet, there's still a relatively low number sitting on our books. It's under like $20 million. It's not a huge number, and that's because we probably closed already between $50 and $100 million of SBA loans. And that's going to continue to grow. And we're hoping to keep stuff on our balance sheet long term. And so it's been a good piece of business for us so far. Again, the model itself has to really mature. So you gotta get through, let's say, 5 years to see what your default rate ends up being. I can tell you that our regular portfolio, we're beating all of our peers because we have no defaults. We haven't had a bad loan in many years. But SBA is a little different. We don't have the same relationship with the borrower. We find the borrower, however we find the borrower, and there's less of a relationship with that. It's a national product, so it could be somebody in Wyoming we've never met, and they found out about us, and they reached out to us, and they meet the box, and therefore we'll lend to them. The rest of our borrowing, in our regular loan portfolio are local Floridians. And for the most part, we lend outside of Florida too for a relationship. But most of our loans are in Florida. Most of that is in South Florida to borrowers that are local, that know our bank, that are customers of our bank, which is really lightning in a bottle compared to other banks that don't. They have to get their loans from wherever they get their loans. We don't do participations. We don't do syndications. We're a portfolio lender that keeps stuff on our books. So I hope I answered your question.
Yeah, no, I think you've given us a lot of important information to consider. So, as you're mentioning, you touched on a bit of a competitive advantage, but Larger banks are potentially re-entering the space. What competitive advantages can you include that you see you guys having, which will protect your market share?
Well, I mean, globally, forget about SBA. Globally, the customers that are our customers are truly like a family member. Like they're known to the bank. We have relationships with them. We're not usually just a transaction where it's one loan or one item. It's usually, we're sitting down with them and, doing a HELOC, doing a financing, doing their banking, and meeting their needs in every way that we can. I mean, we're basically like a wealth management bank without doing the wealth management services. We're not an we're not a broker dealer. We don't do any of that. So when you have relationship and they recognize the value of everything else that we do for them, they're not rate shoppers. It's not a transactional business. And if somebody wants to, nickel and dime and find a bank that is more aggressive on a product, then we lose that customer, and that's okay with us. We can't be everything to everybody. But that being said, when someone's a customer and they need something, we're able to go out of the box and take care of them. And so, that creates a cult following. At the end of the day, we have people that are supportive of us, and a lot of that is relationships that I have, the board has, the loan officers, and I mean, if you were a customer of our bank, like you would be once they hear your voice, they would know who you are. That would be your password. You'd be able to get anything done, and you'd call up and speak to one of my many gems in customer service, whether it be Latina, Nicole, Paul, Bill, Gio, could be any of them. And you call them up and they go, "Hey, how you doing? Good to hear your voice, Carmel. What's going on?" And they would take care of you, and that's just how it goes. And there's a value there. You don't get that at Chase. You're calling an 800 number, and and I'm not putting them down. They're great, but you're calling an 800 number, and the person picking up their phone knows nothing who you are, anything about you. They don't know how many times you've called about the same topic. They don't know how many times you've been on hold. They don't know any of that, and they don't necessarily care either. They have a job to do and a box to check off, and it's a different business model.
Yeah, and then one that the older generation still feel painstakingly. I know because I've got a few of those in my own orbit, and that's usually the concern is that I just wish I had someone to talk to who knows my situation. And so it's definitely a very delicate balance between technology versus relationship banking. Um, Community banks often struggle with this balance. Seems like you guys are taking things on the right track, but either they're over investing in tech or losing their personal touch, or under investing and becoming uncompetitive. But what's your specific technology strategy, and then how would you measure these investments and see how they're actually enhancing or replacing relationship-based modeling?
Yeah, I got a boring answer to that question
Yeah.
because really meat and potato people. The when I meet a customer, a potential customer, like I always tell people when they ask about the technology, like we're average. We're not amazing. We're not terrible. We're somewhere in the middle band. If you're a power user that you need to do X, Y, and Z, right? Our technology won't work for you per se, even though we've spent in the last 2 years $1.5 million in upgrading our technology to be, as good as we think we could get it to be. So we're unveiling that in December. We unveiled the first part in April or May, and then the second part is going to be sometime towards the end of the year. We're close to it. And then we got a couple of other bells and whistles that we're going to add to that are going to be, really, really high. We're going to be the higher end of the middle range of the technology. We're not going to be the top because we don't have the ability to spend that money and make that investment, but we're able to do, the best investment we could do in the middle ground. And so with that, some cool things that we're going to hopefully be doing down the road is technology that through our site, through our app, to do FX trades at some point, to apply for loans and bank accounts. As it is now, we do stuff. We're common sense people. So if we can meet somebody with FaceTime or WhatsApp, video, We don't actually make anyone come to the branch to open up an account, which is a big difference. Big banks, you have to come in person, obviously. I mean, even myself, I needed an account for one of the business that I'm in, and the company banked at Citibank, and they made me sit there. I sat there for 45 minutes, and it just went on and on and on and on. And an hour later, I told the CFO, I'm just sorry, just take me off the signature card. I can't be here for an hour and a half so that I could just get on the signature card. So it is what it is. But our company, again, we're meeting our customer needs. We're not specifically searching for a different type of customer base. We're staying in our lane, I would say, and continuing to grow. I mean, right now, again, we don't have any borrowing. So our growth as far as cash goes has been through traditional deposits. And we have 30 to 35% in non-interest bearing core deposits, which beats a lot of our peers, I believe. And if we weren't growing as fast, we'd probably be like closer to 60%. So it just is what it is, which is great.
Right. So you're obviously emphasizing strong credit quality while growing at that 25 to 30% annually in a challenging economic environment. Walk us through your underwriting discipline. Are you seeing any pressure to relax standards to meet growth targets at all?
No, we don't. I mean, I assume my competitors all have that, and we don't, because the relationships that we have and the deals that come through our desk are vanilla deals. I mean, we underwrite very little of what we do is pro forma. It's all historical. We're on the commercial real estate side, it's market properties with borrowers we know, strong guarantors 99% of the time. You know, appraisals are good, cash flow is good. And no, we don't struggle the way others struggle. I mean, our pricing has been SOFR 350, SOFR 400, which is higher than a lot of other guys. But our borrowers know that what they're getting with us is when they're going to need something, we're there, Johnny on the spot. We could close quickly. It's all about relationship at the end of the day. And
For sure. Tell us about is the same true on the construction lending side?
well, we don't do a lot of construction lending. The bank got burnt on land and construction before I got to the bank, and so we have we have a tortured soul inside of us that says we don't really want to do that. And so years and years and years, we do very, very little. There's some, but there's always a story with the one that we're doing. It's a guy that we know, and he's building a Hampton Inn or something along the 95. We know what the end product's going to be. It's a bonded product, so we know that it's going to get built. And we know that, feasibility study was done or some kind of, data point that they know that along the 95 and that spot is going to, transient or, business travel, like it works. So like there's a deeper thought there. It's not as simple as saying, okay, we have a loan that on paper underwrites, but story makes absolutely no sense. We're common sense people. I mean, our loan committee is a real estate lawyer, myself, and a real estate broker, besides for management that's on the committee. I mean, you're talking about practical. I believe we're practical business people that want to lend money. So, the deal has to make sense. I mean, I jokingly say often, like, I'm looking at every deal we're funding as a deal that I personally would own. If the deal went bad, I'll buy it at par, and I'll be glad to own this at 75% of today's purchase price, like all day long. And so, that's the thought process. We're practical real estate people that say, okay, this deal makes sense to us. It's something I would do if I was in that kind of real estate. I'm not specifically a hotelier, but I see that deal and I'm like, that's a deal I would do all day long, and that's how we lend. And we end up with borrowers that are, good people, again, part of the family. I mean, I can't say everybody becomes part of the family because people, some people are not wanting a personal touch like that. They want to, this is the bank they use, but they don't want to talk to anybody. I don't blame them, by the way. Like and part of my life, I want to be left alone too, but like, But the reality is that to the person that wants, the white glove, we're white glove. The guy who wants to be left alone, we're still white glove, but just we leave them alone. So, and we got a good thing going.
Sounds great. The common sense and customized approach bank, right? Tell me more about the Habitat for Humanity partnership.
Common sense is the key to that last point over there.
I'll take that. I don't know if you heard my last question, but tell us about the Habitat for Humanity partnership. Tell us more about that.
Oh, so as we've grown as a bank, from small bank to mid-sized bank, the topic of CRA, which is the Community Reinvestment Act, becomes a more important item. I personally, ignoring banking, I'm all about community, all about taking care of people, all about helping people. My background is hospitality, nursing homes, and catering. Like, we're all about taking care of people. So CRA kind of fits into our mentality. Specific products are less important, but we did some stuff with senior crime stoppers and helping out seniors and educating seniors. We did a Habitat for Humanity kind of deal, which we really stand behind. We really stand behind the philosophy of taking care of local community and helping out the underdog, and all doing that while we have a fiduciary responsibility to our shareholders, our investors, the regulators. And so there's a balancing act, right? And so we take a portion of our money, our income, and we set it aside to invest in things that are a little bit more risky, taking care of locals, some of the stuff, first-time home buyer stuff, help people get into a first house, which is a problem in the country. And that's what we're working on. And we spent a lot of resources of our human capital to find appropriate ways to help where the yield is better than worse, and at the same token helps solve a problem. And we can't fix everything. We can't even fix most things, but we can be a part of the fix, which in this example, which is also good for business because staying good with the regulators on the CRA side is good. And with that, we've done banking for convicted felons that are out of jail. We've helped out that way. We worked with Broward County on creating some kind of consumer loan backed by the municipality to kind of help people out that are in underbanked areas. I mean, we're doing what we can to kind of help the world. It's a Jewish thing called Tikkun Olam, which is about all fixing the world and helping the world. And, it kind of plays a role in it. And all that while balancing, I always have the thing chirping in my ear telling me, like, you got the shareholders that you got to take care of, and then you got God and helping out the world and the other chirping in my ear. And you got a kind of a balancing act to all of that. And so that's kind of how we roll over here.
Yeah, no, I totally empathize, agree, and would choose the same thing you do because I think a lot of it is just living in that gray area. But I wanted to find out, does this make any difference to you on driving customer acquisition and retention? I imagine you're getting more customers, not really the most profitable kind, but in the bigger scheme of things, does this approach, yes, beyond positive community impact, does it improve customer acquisition and retention at some point?
So just as a general topic, customer acquisition costs by us are minimal. We don't have any marketing budget. Anything that we do charitable, I write personal checks out of my own pocket. The company doesn't do charitable checks. I do it myself. And we support local communities and everything we do literally as my own personal checkbook that I write out. That being said, our deposits have grown drastically over the last 5-6 years, and that's just because of the relationships. Again, I don't want to sound like a broken record, but reality is that people want to bank with us, and we go out of our way to take care of them. I could give you an example where someone walked into the Hillsborough branch, and they wanted to change out somebody on the signature card. And the teller told them that we need all current people on the signature card to sign for a change to signature card. So they said, well, I can't get my brother. My brother is on his way back to Denver, and he was actually here for the weekend, and he's heading towards Miami Airport now. I said, okay, tell your brother, stop wherever he is. I'm gonna have somebody meet him there, and we'll get it signed. And so, like, I don't think other banks would do that. You know what I mean? And so we kind of do that. And, the people want to bank with us because of something similar to that. It may not be that same story over and over, probably not, or it's not. But the point is that the level of service of what we're willing to do, go to someone's office to pick up, a deposit. I mean, whatever we have to do to do within reason, whatever we got to do to take care of someone's needs, we're going to do. So from that point of view, these lower income deposit folks, I don't think the bottom line changes. I don't think it really helps much. But at the end of the day, our overall philosophy is what helps, because that's what pushes that's the motor in our boat that makes the boat move.
For sure. Sounds like bottom line is you're a bank that cares, and people feel that through the relationships and the high touch nature of your business. And I would also, add that it sounds like this could definitely be a differentiator, right, in an increasingly commoditized banking market. So this has been very insightful. Thank you. Again, this has been Chairman of the Board for OptimumBank Holdings, Mr. Moishe Gubin. Again, they are listed on New York Stock Exchange as OPHC. You guys stay tuned for more, and thank you so much.
The GotStocks Podcast is an original content production powered by IBN, a multifaceted financial news and publishing company that delivers next-generation corporate communication solutions. Utilizing proprietary corporate communication tools such as news aggregation and syndication, social communication, and brand awareness techniques, among others, IBN introduces both public and private companies to diverse audiences to enhance reach and recognition. IBN may receive compensation for services and solutions provided to its client partners. You should assume that the owners, officers, and directors of IBN or financial analysts mentioned in this production may hold a position in and may intend to trade the securities in their own accounts. This production is not an offer or recommendation to buy or sell any securities that may be mentioned in this production. The information in this broadcast is presented solely for informative purposes and is not intended to be or should it be construed as investment advice. As in all investments, investment in the featured companies carries inherent investment risk. Listeners should review the companies thoroughly with a registered investment advisor or registered stockbroker. This production by IBN is not purported to be a complete study of the featured company or other companies mentioned. Information used in statements of fact have been obtained from featured companies and other sources but not verified nor guaranteed by IBN as to completeness and accuracy. Such information is subject to change without notice. Please see IBN's full disclaimers and disclosures at www.ibn.fm/disclaimer. Music in this episode is by Infraction. For more, visit inaudio.org.